Okay, in one of my video, I was saying that all of us in the market are liquidity. This is what I was talking about because for market to buy, it needs liquidity, and also for market to sell, it needs liquidity. Which simply means that all of us in the market are liquidity because where Mr. B buy and keep his or her stop loss, though that level is actually a liquidity, and where Mr. B sell and keep his or her stop loss, that level automatically becomes a liquidity level. So first thing first, let's understand what liquidity means. Liquidity is actually levels where buyers or sellers keep their stop loss. You don't need to to mix up things. Just understand that liquidity is actually levels where last buyers or sellers keep their stop loss. So how did you trade liquidity concepts? All these entries you are seeing here is based on liquidity after liquidity grab. So this video I'm going to explain how you can spot liquidity and how to identify liquidity and trade, because what actually moves market is liquidity. What market seeks, for market to buy, market needs liquidity. For market to also sell, market needs liquidity. So if you understand liquidity, you can actually know when market is going to move, because liquidity is actually what moves the market. It's actually what makes the market to move. So if you understand liquidity, you will always be able to spot trades like this. You will be able to enter trades like this. So let's dive into the video. Let's explain what liquidity concept is all about, how to trade liquidity concept. But first thing first, if you are new to our channel, support us by following our platform and also like, share and comment. So okay, please, let's dive into the today's topic. So what we have is liquidity. What we want to talk about is liquidity. You can see the definition of liquidity here: levels where buyers and sellers keep their stop loss. For instance, you see somebody here, somebody that sold from here, somebody that sold from here all the way down here. This is where this is keeping his or her his stop loss, where he keep the stop loss. This way the person is keeping his or her stop loss. So what I want you to note is levels where last buyer. So you can see now somebody that sell now, this is the last sellers. This is where people were selling. So where from this level now, where can you see where is the last sellers? Because this was a sell. So where can you say is your last sell? This is the last seller, because this is where they keep their last stop loss. Somebody is selling. All these levels is where they will keep their very last stop loss. So you mark the high, the levels where the last buyers, or sorry, in this scenario is a last sellers, where the last sellers were. You mark the last position, the last point. Now you wait. So once market pull back, because market seeks liquidity. This is what I mean. You see this buy was able to happen because market was unable to continue this sell. So for this sell to continue, market needs to go up to grab the liquidity from the upside. So that was the reason why this market goes up, to take liquidity from the upside. So now, after you take the liquidity, what happened? You can see market drop back down. The reason why this market dropped back down was because he was able to take liquidity from the left hand side so that he can continue the down movement. You see, market was selling. This is where we get the break of structure. So it breaks structure to the downside and later pull up again. Remember, there was this, you can see a gap. So I also said that once market leave a gap, it's always pull back to to fill in the gap. So this was the pullback. This was the gap. This was where the last liquidity was. Market fill in the gap, take the liquidity. So after market fill the gap, take liquidity. What do you expect market to do? You expect market to reverse. Now you need to have like two conferences before you actually be sure that okay, market is going to reverse. What is the second conference? That's what I want to show with you. Now you see where after market grab the liquidity. Now after the liquidity grab, what kind of candle was formed at that level? Pay attention. This is where you use your candlestick confirmation to trade this particular type of market movement. So you can see after the liquidity grab was over, you can see what happened here, the type of candle that's formed here. You can see that this is after the buy, this other buy, and the next one was a sell, which engulfed the previous buy. So which simply means that the kind of candlestick pattern or confirmation that formed here was a bearish engulfing candlestick confirmation, which signify a sell. So once the confirmation was done, the bearish engulfing was done, you can now enter for your trade, because market has grabbed the liquidity from the left to continue down, and it has given you a bearish a bearish engulfing signal, which means that market is going to reverse. So that was why this market dropped back down. But as you can see from this level, market drop back down. Normally by right, market supposed to drop back down and grab and break this last low, because I was saying, because I said that where last buyers kept their stop loss is liquidity, where last sellers kept their stop loss is liquidity. So for instance, now the liquidity that was here, the sellers here that kept their market here, turning this point to be a liquidity point. Now the people that buy here, the people that buy to take this liquidity, market seeks liquidity now. So this is where they are keeping their stop loss. So once this liquidity is done taking, the next liquidity will be the down, because buyers now have taken the sell liquidity. So now after these buyers have taken this sell liquidity to continue coming down. So it's coming down to take this. Now the sellers now are coming down to take this buy liquidity, because the buy liquidity has taken the sell liquidity. The buy liquidity has taken the sell liquidity. Now it's the sell liquidity, like it's time for the sell liquidity now to take the buy liquidity, because this is where the last buyers were before they push the price up. So this is where the large liquidity is. So as you can see from this point, market dropped back down here, but it did not really grab that that liquidity level. It went up again. So now pay attention. When it went up again, you can see what I marked here. This is a liquidity. How was I able to know this is a liquidity? I want to show you guys something. This is a double top, because once market dropped back here, you see there was a consolidation before a breakout. After the breakout, market tried to pull up before it came back down to that last point. So now from this point, you can see market went up again to create a double top at this level, which simply means a double top is an area of liquidity. This is a liquidity. Market dropped back down, went up again to grab this liquidity, tap to this other block, because there was, after the consolidation that was happening here, market after the breakout, there was the other block before the breakout. So market creates a liquidity here, validating this other block, because when market pull back, take this liquidity, you tap into that other block and reverse. So that was why the other block was created here. So a market creates a liquidity below the other block. So I want you guys to always pay attention. Once you can spot your liquidity below a other block, that other block is always, let me say, 95% to reverse that market, to respect. Let me repeat that again. Once you see a liquidity building below a other block, for instance, this is what I mean. There was a consolidation before a breakout, which simply validated this last buy candle to be our other block. You can see this point, there was a build up liquidity, a double top, because market went up, came down, go up again to create the double top, came down before go up to grab the liquidity, tap to the other block, and it's reverse. How was I able to know? Remember I said that from a sell market to continue, it needs liquidity from the upside to continue the down movement. Let me just draw something for you guys to understand something what I'm doing here. Remember, this was our low point, this was the high. I want to show you guys something very simple, because once we see chart, sometimes chart used to to confuse us of things to look out for in the market. So remember, this was a low before the grab, so we mark it and we bring this one down here. There was this push before price went up there, price came back down, and then went up there again before the reversal. So I want to bring out this thing that I've marked. So that I will explain what was happening. So now you pay attention to this thing that I've just draw out. Now from this level, now here you can see this break. This was the break now. So what happened here was that, pay attention to price action. This is pure price action. Once we get the break, after this break was done, market pull up again. Where did market pull up to? It's pull up to grab liquidity from the left hand side so that it can continue coming down. So where is the liquidity now? These people that were selling here, this sell here, which is this one, this sell. So somebody that was selling here, now share was telling you where the last sellers or the last buyer kept their stop loss. So somebody that was selling all this market here, this is where the stop loss should be. So this buyer now is buying to take the stop loss to grab liquidity. So you can see from this level now, you can clearly see that market has taken this liquidity. So you see, market take the liquidity from this side so that it can continue coming down. So that was why this liquidity now, after market grab the liquidity, it's come down. So this coming down now, this coming down supposed to continue to break, but as you can see, it did not break. It did not break. That is this point. It did not break. So this is what I want you to pay attention, because I say the market takes liquidity from up to continue its down movement. For a sell, for instance, for a sell market to continue, it takes liquidity from up to continue coming down. For a buy candle to a buy market to continue, it takes liquidity from down to continue going up. So this is this. So you can see from this level, you can see what happened here. This drop. This is the drop now. Market pull up again, drop back down. This one. Then pull up again, which is this one. Drop back down, which is this one. Later pull up again, which is this one. So now this pull up again now was, remember I said this is a liquidity building below other block. It gets. So it needs to take this liquidity so that it will reverse from the other block. It will need to take the liquidity from the up to continue coming down. So you can see this level. What happened here? You can see there was a push and down before market go up there to grab this high. It gets. It take the liquidity from the up. After it take this liquidity from the up, that was when this market was able to, to sell. This was when market was able to sell, to break the very last point, which is this point here. So you don't pay attention to what I explain. After you don't pull up, grab this liquidity from here. That was when it was able to pull down. Now you don't pull up, grab the liquidity, tap into this is the other block. It continues. So this thing now is actually exactly what is here. This is what normally confuse people is when we see plenty candles and when we don't understand what market is doing at a particular time. That is the thing that normally gets us, some traders, confused. So this is another example. I explained this example. Now this is another scenario. There was a push up before a market pull back down. Then market finally go up there. You can see. Let me zoom the chart so that you will see what candlestick was, the type of candlestick that was formed there. Because you need your candlestick to, once market is in, after taking market takes liquidity or is in the liquidity levels, you need your, to make use of candlesticks, the kind of candlesticks to, to trade, to know whether the market is going to reverse after grabbing that liquidity. But you can see from this point, market did not really grab the liquidity, but it reversed. That was because if you can pay attention to this point here, what the type of candlestick that was created here was evening star in a supply level. How was I able to know this is the supply level? Because there was from here now, market drop down, go up, drop down. Now it went up again to that supply level. You get. So and it's formed a evening star. This is the buy, this is indecision, this is the sell. So is this the evening star? If you know your candlestick pattern, you know this is the evening star. So that was why this market was able to break down and continue the sell. After the evening star was formed at this level, you now enter. Now this is another one. This was the previous high that drop market back down. So now market finally go up there, the supply level. You get, to grab liquidity from the left. You get, because these sellers, the people that were selling here, this is where their last stop loss is. So some after they sell to this point, market start going, buyers now enter the market again, push price up to take the liquidity from the left. You get. So after market take this liquidity, what happened here? What type of candlestick confirmation is this? This is a bearish confirmation. This is a bearish engulfing in the supply level. That is two confirmation. You can actually enter for your sell after the bearish engulfing was done forming, which signify a sell. We know that bearish engulfing, bullish engulfing signify a buy, bearish engulfing signify a sell. So what we have here in this kind of market is bearish engulfing. So that was why this market dropped in the key supply level. You get. That is how to trade your liquidity. After you identify your liquidity graph from the left, you now trade and you get your, your candlestick pattern confirmation. You can now trade. You can now enter and trade. So if you enjoy the video, if you enjoy the liquidity concept, like, share, comment, and don't forget to give us a follow for more, for more updates like this. And if you want to join, join our community where we trade, feel free to send us a inbox, so that we'll put you to our community. Then you trade with us, you follow us up. So if you enjoyed the video, don't forget to like, comment, and share. Don't forget to give us a follow, so that you go dey, once I update stuff like this, you go dey always dey get notification, then to come and learn and upgrade. So thank you guys. One love.